Hello viewers, I am back with another video to explain the financial crisis faced by Saudi Arabia. Saudi Arabia has been putting efforts into diversifying the economy for decades now. It is evident in their project called Vision 2030, which Crown Prince Mohammed bin Salman launched. But tumbling prices, coronavirus and ongoing Russian-Ukraine have hurt its plans, specifically its non-oil sector. The forecast predicts it will likely decrease by 14% this year. Before going further, please subscribe to our channel to get more such informative videos. Now let's continue our discussion on the financial crisis of Saudi Arabia. The current economic turbulence has made things harder for the average citizens of the nation. A few aspects contribute to the grim situation that the country is currently facing. Firstly, Saudi Arabia's dependence on oil is to end. Around 2/3 of the kingdom's exports are funded by oil. Yet according to a Capital Economics, Saudi Arabia's share of global oil exports has decreased to barely 12% from its historical level of roughly 30%. In an apparent effort to hurt competitor suppliers, Riyadh began a price war even though COVID-19 reduced demand worldwide. It overloaded the market, but as a result, its crude export earnings fell by 65% from April 2019 to May 2019. Since then, prices have increased to around $44 per barrel, which is still significantly less than $77.6 per barrel. The monarchy needs to balance its budget. Furthermore, there is no indication that it will revert to those levels. Tourism won't save the kingdom. With a target of 100 million visitors annually by the end of the decade, this country had hoped that tourism would thrive as a significant component of Vision 2030, Crown Prince Mohammed bin Salman's diversification drive. Riyadh had 35 to 43% fall in tourism, translating to a loss of 28 billion in 2020. Given that the worldwide sector anticipates a decline of between 38% and 78% this year, those figures appear optimistic. Saudi Arabian citizens, more taxes and lower income. Once a staple of Saudi society, low or no taxes have become more prevalent recently as the government looks for alternative revenue sources in the wake of declining oil prices. When Riyadh first decreased fuel subsidies and introduced VAT in 2018, it also provided a cost of living stipend for nearly 1 million people, estimated at 1,000 riyals, that is $267 per month. This helped to lessen the economic impact. According to 2017 UN Special Report on Poverty in the country's poorer individuals are most affected by rising prices, with 2.4 million requiring financial aid. At $21,767, Saudi Arabia's GDP per capita ranks amongst the highest in the world. Nonetheless, the amount conceals inequality within the monarchy and is considerably less than that of other Gulf nations like UAE, $43,103, and Qatar, $64,782. Fourthly, the debt is rising. Saudi Arabia has never needed to borrow money because it is the world's top oil producer. But in 2015, dropping oil prices compelled the monarchy to look to global markets. Due to continued low oil prices, that debt has grown. Also requiring trillions of dollars are the projects included in Vision 2030. The government increased the debt cap from 30 to 50% starting in 2022, which could cause the kingdom's debt to increase further. As a result, Saudi Arabia will now need to behave more carefully in how it spends and raises money, such as by raising taxes. The current global economic turmoil may give Saudi Arabia a head start to come out of its economic problems due to its oil reserve. We can only wait and see how things turn around for this nation. Till then, keep watching for more such interesting and informative videos on my channel.